right. Good morning. It is Monday, April the 15th, 2024. We hope you had a nice weekend. April 15th, of course, meaning tax deadline. So hopefully you're either finishing that up or filing an extension. Also means IRA contribution deadline. All right. So, for those of you that work with us, of course, if you're eligible to contribute, we've been bothering you the last few weeks, kind of figuring out where we're going to fund those contributions and so forth. So just kind of a final reminder, if you have not contributed to an IRA and you're eligible for the 2023 tax year, might want to do that today. Just quickly here, I just wanted to thank everyone for, I write these quarterly newsletters, well, once a quarter, of course, but so this month of April represents 10-year anniversary for Oceanside, and it was just a lot of kind feedback and some congratulatory notes were sent by many of you, and I just really appreciate it. It's I wasn't expecting some of that feedback, and we just feel so blessed. I say it a lot here around the office, and I know the other guys here feel the same way. But we feel so blessed to do what we do, help the people that we help, and really looking forward to continuing to serve in the future. So thank you for the feedback there. That meant a lot. All right, so markets last week, kind of a lot to dig into. As most of you are aware, just really unfortunate kind of to see, just the geopolitical escalation, right, in the Middle East with Iran and Israel. Nobody likes to see that. And, keeping politics aside, right, so in terms of markets, right? So the nice thing about markets is if you take a step back, like, what are markets? Okay, so markets are, they represent the aggregate expectations of the millions of market participants around the globe, right? So when you look at something like the Iran-Israeli conflict and how it's going to impact markets, right? So as most conflicts in the Middle East, anytime you have a conflict like, just given the amount of supply that comes from oil markets, you would expect oil to shoot higher. Okay, and so you kind of saw that late into last week, and then this morning you see oil down quite a bit, and you actually see equity futures higher. Okay, you also don't see the flight to safety that you usually would in a high risk situation where, like, U.S. Treasuries, right, would get a serious bid, so prices higher, like yields would go down. Okay, so this is not to suggest things can't change on a dime, right? If somebody makes a stupid decision and things really spiral out of control. But in terms of what financial markets are predicting, like, so the base case, like the base case of the highest probability, markets are suggesting that things are not going to get crazy. Okay, just again, you see oil is down this morning, equity futures are up, bond yields are somewhat stable. So again, that could change in an instant, but at least, like, the base case right now, in the short to intermediate term, it appears that it won't escalate. But so again, anything can happen. But I can tell you what markets last week did price in very rapidly was when the CPI, the inflation number, came in. Okay, so for the month of March, the month over month number, 0.4% inflation. The year over year number, 3.5%. Okay, those were both a little bit higher than expected. All right, so what you see there is, in a matter of seconds, right? So equity futures, U.S. equity futures were, about 0.5% higher That number came out, and within seconds, it was like a 2% reversal lower, right? Because, again, markets being the aggregate expectations of market participants, right away it's like, okay, the summer rate cut is almost certainly off the table. And so equities, which are going to, they get their value from that discount rate, are going to go lower on that, right? So just kind of a good example of how you get an inflation number that's a little higher. Now you get a lower probability of a rate cut, which means just the dominoes fall. So yeah, we'll see the way that shakes out. Yeah, so on that, of course, equities a touch lower, which, again, given the geopolitical concerns and even just how well equities have done year to date, really, like, no one should be surprised. Markets down a touch last week. Frankly, I wouldn't be shocked if they markets continued to be challenged and kind of consolidated in the months to come. I don't think anyone should be surprised by that, but I don't know. We'll see. So, questions, comments, concerns, please don't hesitate to reach out to us. Again, thank you again for some of the kind feedback on our firm's 10-year anniversary. And we look forward to hearing from you soon. Thanks.